we released this report last Thursday. I presented at the launch event, and I'm going to present the same slides again to you guys today. Please save your questions for the end, but I'm very happy to answer any questions that you have. And again, as Matt says, the report is 52 pages long. Some of you may have read it. You've had a whole 6 days to do so, but I'm assuming you haven't, and that's also absolutely fine. What I'm going to cover is not the entire content. There's a huge amount more, but I'm going to pull out specifically the metrics and the analysis that we've done in terms of the data and what that's telling us. So my name is Helena Kosinski. I'm on the advisory board of MTUK UK and have been since it launched back in 2023. I'm formerly of Luminate and Nielsen, and back in my very distant past, the PRS for music, and have had a career in that music tech data space. And it's been really, really interesting to work on this over the last couple of months with Rufi, who's also on the call with Matt, and then with Gareth Deacon, who I think will be joining us too. So, first, I'm going to tell you what we did and how we did it. So the report, why did we decide that now was a good time? MTUK UK has been around for about 18 months. And it's very difficult to go to policymakers. It's very difficult to have conversations within the industry advocating for members, for the sector itself, if you haven't sized it, if you don't have any objective metrics around what it is, how big it is, what the challenges are. So really, this was the next logical step for MTUK UK. We needed something to give out to the broader industry to help those conversations, also something to help our membership, give them some metrics, some data, something to put into their presentations, and then also help attract investors, help attract and advocate for this sector, which is the purpose of MTUK UK as a trade association as well. Now is a really good time. The UK government recently announced their industrial strategy. We know that both the creative sector and technology are two of the 8 pillars of focus for the government and for economic growth. And interestingly, there was an article in the Times last week which highlighted that a report from Deloitte, where they surveyed lots of CFOs, that had said that actually the UK as an investment destination is growing. So more broadly in the investment sector, the UK is looking more and more attractive for a number of reasons, but also I think from a geopolitical situation, we are a very stable country, a stable market, and there's a lot going on here. So really what we wanted to do was understand where we stand, what's happening in the sector, and have some numbers to put behind that. So then what we did first was define music tech. For the purposes of the report, we needed a very strict definition. And so our definition of a music tech company is one that makes its primary revenue from the development, production, and exploitation of technology. So rather than exploiting the commercial assets of the industry, the IP, so no record labels, not publishers, or anyone exploiting the kind of the live performance, it is someone who is making the primary revenue from the technological side of things. Also, not anyone who's pressing vinyl or making guitars or anything analog and physical. That the technology obviously has to have a music component to it, or provide a service to the music industry. So that can be B2C or B2B. And the company has to be headquartered in the UK for it to count towards our numbers. So that was our definition that we started from. And then we gathered a lot of data. So we used a third-party data provider called Traction for part of it. So that gave us a lot of the information about investment rounds and the amounts that's been raised, and also the companies within the sector. We did a lot of manual enhancement as well, and a lot of our own research. And then to add to this and add some voices from the industry, we interviewed 15 people from across the industry. So that was investors, angels, startups, people from government, just to get those additional perspectives to kind of give context to the numbers and the analysis that we were doing. Is this report perfect? No. Does it cover everything that we want to? Absolutely not. There's a lot more scope for growth, and this is very much the first. It doesn't do an economic analysis of the impact of music tech to the UK economy. That would be great to do. It doesn't compare the music tech sector with other sectors in the UK, and it only does very limited comparison with other international markets. So there's a huge amount more that we could be doing, but that involves more time and more investment as well. But that's there for the future. So let's look at the numbers and let's look at what we found out. So firstly, the investment opportunity and how much is being invested into the UK music tech industry. So over the last 5 years, so from 2020 to 2024, in total, it was just shy of $500,000 or around 360 million pounds that was invested into music tech companies in the UK. You can see 2021, that post-COVID spike, much more invested in that particular year, and around 50 to 100 million in an average year that's being invested in UK music tech companies. What that looks like when you break it out by different types of funding rounds is that you can see that seed is that teal chunk at the bottom. That varies a bit in terms of the amount of money year by year, really quite low in 2023. Series A is another reasonable chunk, but in the last 5 years, in 2021, there was a massive Series C round that accounted for a huge amount of that money in that particular year, and in 2023, a huge Series D round. Now, those were both for Dice, the ticketing company. So that, to a degree, skews the numbers there. But on the whole, the majority of revenues being raised from seed or Series A. In terms of the number of funding rounds, that looks quite different. So again, that peaked, albeit by one, in 2021. But what you can see here is just the individual number of rounds raised by UK music tech companies. So the majority of those is that yellow chunk, that is seed rounds. So by far the majority of rounds that are raised are seed, then followed by Series A, which is, what you would expect to see. But actually those later rounds, there really are very few of those being raised in the UK. The amount being raised, so the average amount here is in the table. So the average seed raise is just shy of $1 million. And there were 88 total rounds in that 2020 to 2024 time period. Series A is 17, and then it really drops. So only one Series C, Series D rounds in the last 5 years. So then we took a look at what it takes to found and fund a music tech company. So this is probably the stat. When you write a report, it's always quite interesting. You're like, what is it that people are really going to grab hold of? What's going to be the talking point? And I think it's a stat from this page that has really been like the number that people take away. And that number is the fact that in 2023 and 24, there's only been an average of 4.6% of all of the music tech companies that have been founded that have raised funding. So what you see on this chart here is the percentage of companies that have been founded in a particular year that have raised funding. And that's any sort of funding, so seed or grant, anything like that. And the average across the last 10 years is that yellow line. So that's between 17 and 18% of all companies founded in a particular year getting some type of funding. And so you can see that in the last 2 years has really dropped. And it could be for a couple of reasons. It could be that the data is imperfect. It may well be the case that we don't yet have all of the numbers of companies being funded. It could be that companies founded in a particular year just take a couple of years to raise that first round of funding. Or it could be that the economic landscape is much more challenging out there and actually fewer companies are getting funded. So it would be really interesting when we get to the end and we have a bit of a discussion to hear anyone's comments on that as well. But it really is quite a significant drop that we're seeing. Another thing that was very important for us to call out was the number of female-founded companies. So this metric comes from Music Tech UK members. So Music Tech UK has over 100 companies that are members, and of those companies, 17% of them are female-led, which is slightly shy of the average in the UK, which is 19.1% of companies being female-led. So it's definitely a number that we would love to see increase. And Music Tech UK does have a number of initiatives in that space, including FemT UK, which is a subset of our membership specifically geared to female-led companies and discussion in that space. Another thing that we did with the data was we dug a little bit deeper because, as you can see, and I explained at the beginning, Music Tech UK is a very, very broad definition of a company that can be a music tech company. So we then divided all companies into subcategories, and each company could only have one subcategory. So then we could see things like what type of music tech is most likely to or has been most successful in raising money in the last 5 years. And the most, and I mean, it's not absolutely one company above all, but audio tech companies in the audio tech subcategory have been the most successful. That's companies like Volu, like Ordu, both fall into that category. After that, we've got marketing promotion tools. So that's companies like Fan Circles or Unheard. Live streaming is companies like Drift or Condensed Reality, both fall into that category. Gen AI, that's companies like Bronze or Darcy. So these are the ones that have been the most successful in raising funding in the last couple of years. And then these companies or these subcategories are the ones where the majority of companies in that subcategory have raised funding. So the top there, you've got hardware companies. So that's a company like Yoto. And there we've got 10 total companies in that subcategory within the UK, and 8 of which have raised some money. Now, that may be because if you're building hardware and you can't raise money, then there really is a very limited way you can go before, you can't even bring a kind of proof of concept to market. But it's interesting that some of the same types of companies are up there, but not all. And then we also see Gen AI there, where we've got 25 companies, Gen AI companies in that subcategory in the UK, 9 of which have raised funding. So there's quite a number that haven't. So these are the most successful subcategories in terms of percentage that have raised funding. We also then took a look at what was happening around the UK. So Music Tech UK, albeit headquartered in the UK, is really interested in what's happening around the UK and very supportive of that. So on the left here, you see the location of the headquarters of the music tech companies in the UK. So London has 56.6% of all of the companies in the UK. The Southeast is next largest, the Southwest, then we've got Midlands, Northwest, Northeast, kind of around that 5% mark. And then Scotland, Wales, and Northern Ireland, slightly lower. And then on the right-hand side of the slide, you can see where the investment is going. So I think it's pretty stark to say that almost 100% of all of the companies that have had some sort of investment in the last 5 years are headquartered in London and in the Southeast. And so that's telling us a couple of things, perhaps. One, that successful companies move if they want to raise money. London is very much the capital centre of the UK. Or it's telling us that actually we're sleeping on quite a lot of companies that are elsewhere in the UK, that there is innovation happening that we're not necessarily, the investors are not necessarily picking up on and investing in. Then we took a look at music tech and the rest of the world, and to see what impact other markets are having on our homegrown technologies. So first, here you see the location of investors into music tech companies based in the UK. So on the left, you've got the location of those investors that are providing angel funding, grant seed, Series A over the last 10 years. So now we're looking at 2015 to 2025. And what you can see is the majority of them come from the UK. So almost 40% of those investors are from the UK. For about a quarter of them, we don't know who the investors are, undisclosed. And then the second largest market is the US. And then we have some other European and China in there as well. So the majority of that early stage funding is coming from UK-based investors. When we look on the right-hand side, you've got investors in Series B, C, D, and future rounds. So kind of the growth capital, late stage investors. And the largest chunk there is from the US. So almost 40% of the investors are based in the US, the UK being second, and then we've got another undisclosed amount there. So really that later stage capital, and this is a story that is, this is not just for music tech, this is across the board. That later stage capital is more likely to come from the US. We then also took a look at how does the UK compare with the music tech sector in the US? And this is the last 5 years of investment. So you can see that it peaked in the US in 2022 with almost $800 million of investment into US-based music tech companies. And so what we see here is that the UK is, depending on the year, between 8 and 36% of the US totals. So I'm not 100% sure what to make of that. Is that good? Is that bad? Is that what we would expect? It's certainly in the range of recorded music revenues. So if, recorded music revenues in the UK are around 10% of what they are in the US. But is that a good benchmark? Should we be more? And then moving on to exits, which is, ultimately what most companies that are starting in this space are aiming towards. So here we have the last 11 years or 10 and a half years, we've included 2025 in this, of the total number of companies that have been acquired or acqui-hired over the last 10 and a half years. Included 2025 because already this year there have been 4, and we're only halfway through the year. So you can certainly see here that in the last couple of years, peaking in 2023, we're seeing more companies get acquired or acqui-hired. Now, is that because they've reached a kind of a point at which they're ready to be acquired, or is it because it's really difficult to raise money and that's the only way of continuing the business rather than going under? There's a number of stories that you can pick out from this trend. And then we took a look at those companies that have been acquired or acqui-hired, and what do we know about them? So on the left here, you can see the investment stage that those companies are at exit. And interestingly, half of them are unfunded or bootstrapped at the point of acquisition. So really, really very early stage companies. A further 12.5% are seed, 2.5% raised an angel round, 10% Series A. So across the board, it's really quite early stage companies that are being acquired or acqui-hired. And on the right-hand side, you can see the location of the companies that are acquiring homegrown music tech companies. And almost half of them are acquired by US companies, a further quarter by UK companies. And then we've got Canada, Sweden, and Australia making an appearance there as well. But really, what this is telling us is that later stage capital is coming from the US, and quite a lot of our companies are being acquired by US entities as well. And then finally, what kinds of companies are those most likely to be acquired? So what we have here is a really long list, because I think this basically tells us that there is no one particular subcategory of music tech company that does better than others. So production and audio tech are up there, again, with marketing promotion tools. So they were on the most likely to have raised funding list, certainly audio tech and marketing promotion tools. But really, it's a lot of different type of companies and a lot of different subcategories. So to summarize everything that I've run through in the last 20 minutes, early stage funding is active, but scaling is harder. So it's easier, not easy, to raise those early funding rounds. It is much, much harder to raise any later stage funding. If you're in London, then you're more likely to have raised money, for sure. Audio tech leads those funded subcategories, also leads the acquired subcategories as well. 360 million pounds is the total amount that has been invested in UK music tech companies over the last 5 years, which I do think means that there are lots of subcategories that are underserved. So we had a list of the ones that are most likely to have been invested in, but there are 37 different subcategories that we categorized all of the music tech companies into. So there is a lot of untapped potential around the UK, outside of London as well. We saw that company formation peaked in 2020, so during the COVID period, but really in the last couple of years, it's been really hard for companies that have been founded more recently to raise funds. US capital dominates the larger rounds, and it also dominates the acquisitions. And that those acquisitions are increasing. So 41 companies have exited since 2015, so in the last 10 and a half years, and 70% of those have been since 2020, so since the kind of COVID period. And yeah, so that's kind of the summary of the key points that we talked through. The report, like I mentioned, is extensive. Along with all of these charts and all of this data, it has a lot of other bits and pieces, including what we think are focus areas for regulators and for the industry. And also includes a lot of quotes from key industry people that we have interviewed. So there's a huge amount more in there. It also includes some cool case studies as well that we've done on particular UK companies that have been successful in raising money. So here's a condensed reality example, but these are kind of peppered through the report. So if you have joined this and you have not yet downloaded it, or you've downloaded it and you've lost it or whatever reason, then here is your QR code. Please download it and take a read, save it, refer to it in the future. We really hope that this will be a resource for the next year where people can just pull out various stats and quotes and graphs and can be a real reference point for the entire industry. And with that, I am going to pass over to Matt, who is going to talk about the next steps for Music Tech UK. What does this report and all of this analysis mean for the association and what we're going to do next?
That's great. Yeah, thank you, Helena. That's great of you. Thanks for talking us through the data. So clearly, obviously, lots of food for thought there. Yeah, it's not just a report which focuses on data. It's also one that kind of focuses on what we as an organisation need to do about what we've discovered here. And what the next steps are for MTUK. And as Helena said at the start, we're a trade association, so part of our work is to give the industry a voice, provide it with some lobbying force, speak to governments and all those kinds of things. So it's really important that we've got the data to back our arguments, but also what does the data kind of lead us to kind of call for next? And there's a couple of key kind of areas that I think we wanted to focus on and that we focused on in the report. I mean, first of all, it's this kind of this idea about driving recognition. So UK governments already recognise the creative industries as one of the 8 core growth areas in its industrial strategy. But we want them to go a bit further than that and push to position music technology as one of the really core pillars of the creative industries. Why? Because it's such a connecting force between different creative industries. It brings in so many different elements from different places, and it can be a real multiplier when it comes to technology and different creative industries to bring different areas in. So we think it's a really kind of important, forceful area for the creative industries and one that should be recognised as such. But part of that kind of recognition isn't just around for instance, what we'd like to do is do something like maybe a parliamentary showcase, that kind of thing, to actually kind of position music tech as being this central and important part of the creative industries. But recognition is just part of the question, I guess. It's also about funding. So the creative industry sector plan plans to increase investment in the creative industries to 31 billion. And that's set out to do, that government report. And music's a core focus of this report. And they've actually planned to invest 30 million into live music, emerging artists, and all these kind of things, investing in this kind of way. We feel as though music technology deserves to have a place within that investment and any further investments for the music industry. It's an enabling force. Music tech is an enabler, and it also future-proofs the music industry. So if you're helping music technology to grow and develop, you're also helping live music, emerging artists, and all these other elements of the what you might call traditional music industry as well. So we're calling for music tech to be recognised as an important part of that package of funding. Thirdly, thinking about kind of global expansion and international element. A big part of what Music Tech UK has been about from day one is talking about international expansion and helping UK music tech companies to grow their global footprint. We recently took part in a trade mission to LA with 10 music tech startups in partnership with the UK government. And so there'll be more of that kind of thing coming to LA, but also we want to extend that international presence to further trade missions. We're looking at the EU, Australia, and also India. These are priority markets that have been outlined in the government's creative sector plan. And so we really feel as though we need more support and more development to help those kind of trade missions and international expansion to take place. And we'll work closely with our partners around the world on that. So Music Tech Europe, for instance, which we're members of, Music Tech India, that we're speaking to about this kind of thing as well. So there are lots of opportunities here to work with global partners to create more global outreach for music tech, UK music tech companies. An important part of what's in the public eye at the moment about music tech is the discussions around AI and copyright. We really want to fast track regulatory clarity on AI. The uncertainty that's taking place in the industry isn't helping the sector to grow. We need practical frameworks that will help for fair compensation for all without stifling growth. AI companies need to be able to develop and grow in a framework that makes sense to them, without ignoring the fact that rights holders and artists need to be fairly compensated for their work. I think we can get there, but we need fast movement from government to make this a possibility. Music Tech UK can play a key part in this, in bringing people together, getting people around the table from all sides of the music industry and also technology as well, and AI companies, to help come up with practical solutions to this hotly debated area. But finally, I wanted to kind of focus in on deeper partnerships. And I think this is probably the most important point in what we've been talking about in terms of solving some of the issues that are in the report. We want to forge deeper partnerships, first and foremost with the music industry itself, creating better understanding between rights holders, artist managers, the live industry, PROs, and creating those kind of feedback loops so that one of the pieces of feedback that we got at the event, the launch event itself, was that music tech companies often may develop technologies without really having an insight into how important or useful or necessary is it for the music industry. Well, we want to create those feedback loops with our partners in the music industry to make sure they're completely aware of what's needed by the music industry, and the music industry is feeding into that understanding and awareness of what's needed. So that's really important. But also other partners that we want to forge more ties with our investors for engagement and creating connections for our members. Support organisations, we've talked quite a bit about Innovate UK, Digital Catapult, and Department for Business and Trade. We want to help create more integrated pathways between all of these institutions to support government and help create that pathway to help music tech startups right from day one all the way through their development in a more strategic way. So I think the key point for me as I just wrap up is that, working with as many stakeholders as possible, right through 360 degrees of the music industry, can really help to build something important here and help to build the UK into, the most connected ecosystem for music tech in the world. So thank you very much for listening to me. We're now open to moderate and get into some questions from attendees. If you've got any questions, if you could raise your virtual hand, and we'll take you one by one and we can get into a discussion. So any initial questions from anyone?
The physical hand.
We've got a physical hand from David.
A physical hand,
David.
but it's quiet. So I'm Focusrite. So I wanted to just check actually a couple of data things just to make sure either the definition's not what I'm thinking it might be, or that you're missing some stuff. So just around acquisitions.
Yes.
So obviously we've been relatively active. So I don't know whether you're picking up the businesses we've acquired. Audiotonics have been relatively active as well. And then there's the likes of Addendum as well, the old VTech. So and I guess all I was thinking then was, as you showed the acquisition numbers, it felt as though they might be higher, which might be quite a good addition to the story.
It may well be. So like I mentioned at the beginning, the data that we have comes from primarily or initially from a company called Traction,
which
is a third-party data provider, similar to like Crunchbase or PitchBook or any of those entities.
Right.
Now, is that what they're generally doing is aggregating publicly available data. So if there has been a press release about it, but either about a fundraise or about an acquisition, then that's going to kind of automatically get pulled into their data set.
Right.
Is their data perfect? Absolutely not. Have we done some cleanup and ask them to do some manual cleanup as well? Yes.
Okay.
But it may well be that, yes, we are missing a couple of bits and pieces. And it's a data set that obviously we would love to make as comprehensive and as accurate as possible. So if you have companies that you've acquired that you want me to check, or if you, and this is to the rest of the group, if you're a company that has raised money and you want to make sure that you're part of our data set and we've accurately captured your fundraise in there, then I'm very welcome. I really welcome like any of that input. I did have someone reach out to make sure already that they were included, and they were, thankfully. So, but I'm not, by no means am I saying that this data is perfect.
No, that's fine. That's fine. I just wanted to understand the definition, and whether therefore there might be some that would potentially bump the numbers up and make it look a bit more interesting, I guess, from an acquisition point of view. So, Helena, if you want, I can send some stuff over to show you what I've got.
Would be
and
amazing.
then you can cross-check that against yours. I guess just to follow on from that, there's also, you talk about funding, you talk about debt rounds, and you talk about post-IPO. So what did post-IPO mean?
Again, I think that's Traction's definition.
Okay, fine.
So it is that's a good question. It's whatever they've defined, but I can. I mean,
and all that's springing to mind again is money that's flowing into the industry, where we as Focusrite, for example, have got a revolving credit facility with our bank. Would that count in the numbers? Obviously, there's then been some PE investment in the likes of Audiotonics. Videndum will have done various things, who are kind of music video tech. So kind of in this space. So I just wanted to, again, it was a bit more of a definition, because, like I say, just from the work I do at our place, some of those numbers they could have been a bit higher.
Right. Okay. I'll dig into that, and let's have an offline conversation about that.
I was going to say, I'd love
to get your input as well as to like what you think is the right thing to include, and why, and what shouldn't be included as well.
I guess that depends the overall story we're trying to tell, I guess, doesn't it?
That it's an attractive space for lots of investment, please.
Yeah, exactly.
So, thank you. Thanks for
that's all right, no problem.
Thank you very much, David. As Helena says, it's a living, breathing piece of data that we're developing. This is year one of a piece of research which we've done into fairly limited kind of capacity in terms of funding and so on. So this is our starting point, really, and it's by engaging with the sector and our case study and our the various people involved with us and our members and so on, that we can build this into something that's really, really, really important. And I say this is just a start in many ways. Over to you, Jason. You've got a hand raised there. You can just unmute yourself as well.
Yeah, thank you. So my question is, I'm curious, just from your team there that worked on this report, what do you feel like are some of the takeaways, or sort of most important kind of follow-on actions that you would recommend, or think would follow from your research and your data for the startups themselves, in terms of whatever it is, improving their ability to get funding or pursuing the right avenues? I'm just curious on any thoughts you have around that. Thanks.
I think one of the elements that has come out in the report, and so like I said, there's a lot of quotes and input from companies that have been successful as well in the report. And one of the things that came out was the telling your story in a way that is understandable to investors. So one of those things is positioning your company in a way that is that maybe is akin to some other sector that they understand. So be it education or a fintech, as well as just like a pure music tech company. I had another point, but I'm going to also, Rufy Gareth, jump in if you, and Matt, jump in if you have anything else. Oh, I know what I was going to say. And then in the panel session that we had last week at the launch event, there was Hugo from Edge VC on the panel, and his advice was basically revenue. You're much more attractive to an investor if you've got money coming in, and that speaks more than anything else. But I mean, that's a kind of glib answer to your point. But Rufy, Gareth, is there anything else that you'd add?
Yeah, I think having the data readily available to tell stories was one thing that came up again and again when we were chatting with different founders. And I think that's a really good action point that can be dealt with right away, as to like what we're just talking about, how we can make this database more comprehensive so that we can support the MTUK members and provide them with that information so that they can tell their stories and have these numbers readily available, which unfortunately are not right now. So yeah, I think that's one of the action points that I think can be dealt with right away. And good question. Thanks, Jason, making us think as well.
Sure, my pleasure. I have a follow-up too, if that's okay, unless there's someone else with their hand up at the moment.
No, I think that's fine. Go ahead, Jason.
I'm curious, did you notice any patterns or bias or not to companies that were, obviously a lot of the music tech world is in Germany, for instance, or, continental Europe, and of course in the US too. Did you notice any sort of bias for companies that tended to be partnering with companies either established or startup from other regions, or that were looking for, customers there, versus maybe a company that's building a music tech product and primarily marketing it in the UK? I don't know if you had any takeaways from that. Just curious.
I think most of it were companies that have a global use case, and not necessarily, or maybe there are companies that are starting from one area, but then the use case is pretty global. And that was one thing that came up, where also the investment is going. Companies that are dealing with a global problem and not just a market-related problem.
Gotcha. Thank you.
I'd add one more thing, which is, so the question's a little out of the scope of what we were looking at. So we weren't really looking at and didn't pull in data about necessarily where these companies are then exploring commercial activities, because it's primarily about where the companies are situated, i.e. in the UK as a commercial entity, or like a legal registered entity, I should say, and then where the money flows in. So a point I would make about that, because there's an ongoing conversation in the chat about some of the complexities and stuff. So it's an interesting point, Jason. You bring up a point about like, actually, what can we do to think about trade, right? So like one of the things that came out of doing this report was a lot of conversation about trade and investment. Investment generally from policy and government, when it's based on a region, is largely predicated on driving, global competition, trade, investment, etc. Right? So super linked, right? But slightly out of scope of the data and the report that we were putting together. But the other thing that's worth bearing in mind, particularly in software, an awful lot of companies formed in various parts of Europe, particularly the UK, are then the legal entities Delaware, right? So in the US, and they do that for fundraising reasons or for other sensible reasons, predominantly fundraising. Or companies that came up in the report that will start in European markets, start in the UK, and at later rounds when they need to start raising bigger amounts of capital, are going to have to spend money, spend time, effort, and energy on doing what was referred to in the report and generally referred to as Delaware flip, which is additional costs, right? So like there's that piece as well, and trying to capture some of the complexity around like the jurisdictions of companies and how and where that data flows was slightly outside the scope budget that we had for managing this report, because it gets quite complex, right?
Sure.
And go on, sorry.
I was just going to say, and I apologize because I haven't yet digested the whole report.
No, it's fine.
But this is in there. But so does that mean that many or some of the companies that were included in your survey and, the data is reflected in this report, some of those may actually be domiciled in Delaware, even though their, headquarters is in the UK?
Yeah, so they may effectively appear to be a UK-based startup or even be an MTUK member in some way or other, but actually their legal entity may well be Delaware for a reason, right? So,
Gotcha. So this is
they're,
about like physical headquarters, basically where they're coming from.
Yeah.
Okay. Yeah. Got it.
and then the other piece is obviously taxonomy, which Helena touched on, right? Like, so how you make definitions around taxonomy and how taxonomy has been decided and or picked up correctly from public data, or from the companies themselves based on how they want to position the company, then affects what gets pulled in. So there'll be some gaps, and there's definitely a discount though for the Delaware side of stuff, which would be really interesting to explore at some point later.
So you didn't notice any bias or either for or against a Delaware-based company with regard to investment from UK VCs or angels or whatever?
I mean, we didn't look. I mean, the thing with particularly early stage, predominantly particularly with early stage investment, like geography plays a big part. So obviously in the UK we have SEIS and EIS, which is incredibly advantageous for like angel investments from UK based investors into UK based companies. That changes through later stages. But yeah, tax and tax jurisdictions play out. Like I guess one of like I wouldn't know there was data in the report specifically to bear this out from an evidence point of view. But one of the things that seems to be our overall market is, like very global and comparatively smaller than some other really, really big sectors. I think there is an undue pressure in individual markets that you are international from day one. So like we didn't look necessarily, I don't think, Helena, like the individual, like nationalities of investors. We did, Helena made the point about like very early stage investment predominantly came from UK or UK based investors of varying classes, but sure, later stage investment came from predominantly US. And that's a pattern that you see or gets reported a lot in general around broader investment. There was a piece yesterday about current venture funding rounds, like globally. We're going into what's going to be one of the biggest we've seen in a number of years for the H1 of the year. However, the majority of that is going to AI, and the majority of that is going to a handful of companies in the US. So like I think 5 companies make up the majority of it. So that's like concentration that's not necessarily seen as healthy. So there's other trends that are outside of music.
Yeah. Thank you very much. I've got another raised. Actually, no, I don't. Someone coming into the room. Sorry, beg your pardon. Do we have any other questions at all? Any other raised hands for discussion? Either a follow-on point to what was just being discussed? Yeah, Richard Hinckley, over to you. If you just want to unmute yourself.
Hi, thanks. I think it's a fantastic report. I suppose my question is around where your sense of increased investment is going to come into the industry. Where is it most likely to start coming from?
Sorry, Richard, can you repeat that?
Oh, could you not hear me? Okay. Can you hear me okay?
Yes.
Okay. It was just if one of the purposes behind the report is to try and encourage, identify music as an investment opportunity. So if more investment is to come into the industry, into music tech, where might the investment come from? Where do you see it likely starting to come from?
Potentially from a number of places. I think, like I mentioned, the government have creative strategies as part of, as a sector that they are interested. They want to grow investment in that area. That doesn't mean they're going to invest necessarily, but they certainly want to attract more investment into that area so that they see it as a key area for boosting UK economic growth. The British Business Bank, I think, and then also there's been a lot of talk about pension funds and potential, pension fund investment, or the government has been, and Hugo touched on this on the panel last week as well. the government is encouraging, and they can't do anything more than that at the moment, UK pension funds to invest more of their pension fund money into UK companies. And so there may well be some VCs that are recipients of some money there. There's a number of potential areas I think it could come from. Yes.
And as Helena said, one of the things that we've outlined in the report is this idea that the British business banks got this £4 billion industrial growth strategy fund, innovation fund. So we're looking to kind of get some of that fueled through kind of an innovation fund for music tech. And also one of the things we're looking to do is kind of help educate, more people to get into investment by educating them about kind of EIS and SEI tax relief schemes. So that might open up more angel investment and that kind of thing in the sector as well. And that's one of the things that we're calling for in the report, is to kind of try and encourage more people to go into angel investment by explaining the opportunities with those schemes. So that might be another potential route.
Thanks.
Thank you, Richard. Any other questions or thoughts or just reflections on what's in the report? We've got about 4 minutes left.
John is waving.
John,
I couldn't
over
find
to
the
you.
little button. I don't know where it is. Anyway, I know that you haven't done this, and I know you do want to do it, but it'd be really interesting to benchmark a lot of these numbers against other sectors and the investment ecosystem in general. So with the knowledge that you haven't had the resources, or you haven't had any resources, you haven't had the resources to do that work, what does your gut say about whether or not the things you've identified in general here are common across all domains or specific to the domain we're in?
I think that a lot of things are common across lots of domains. So certainly the challenges in raising later stage growth fund capital, even if in other sectors, they're looking to raise lots more money than necessarily the music tech sector is. I think it's equally as challenging in other sectors to raise that money, and especially raising it from UK investors. It generally comes from the US. That is a story across lots of sectors. While you're right, we didn't compare ourselves to. We didn't do any analysis directly with other sectors. There is another report by Tech Nation, which came out in June, which does compare different sectors in terms of growth and interestingly, music tech is one of those sectors that they've compared, and they have put music tech on the higher end of one of the sectors in the UK that has grown the most over the last couple of years in terms of investment. It's not obviously one of the sectors that's raising huge amounts of money, but in terms of growth, it's one of the fastest growing. I'm going to see if I can find that, but if not, then you can just download the Tech Nation report 2025 for free. And
I shared that table, Helena, in the chat.
Have you? Oh, Rufi, you're on fire. So there you are, everyone. If you go into the chat, you can see that table, which they published. So music is third after robotics and event tech in terms of increased CAGR over the last 5 years. So
it's probably pressing too much on this now, but do you know if that includes rights acquisition? Does their definition include rights acquisition?
I don't know that. I don't think it does, looking at the numbers. And this is an investment as well. Don't think it does.
We can have a look at that, John. Yeah, that's worthwhile us following up and in a comparison of those things. That's great. Well, I think it's at this point that we need to wrap up the discussion. So thank you so much for everyone taking part in and voicing your questions. Thanks, Helena, and the rest of the team for presenting the findings. You've got the link there, I think, to download the report if you haven't done so already. Please do. And yeah, thank you so much for joining us and learning about this. And as we've said, it's an evolving piece. There's more data to come. We're not going away. We're building this research piece as something that's a resource for the whole industry. So thank you for your interest.
Yeah. Any follow-up questions or data that you want to share with us, then please do. We welcome it all.
Thank you.
Thanks so much.
Bye.